with all the factors we've been discussing throughout this conversation, there is a reality which I can see materializing where we do not have the typical 4-year cycles that we've had historically up to this point. We've talked about this, whether you call it hyper Bitcoinization or the tipping point. And that's one thing I'm grappling with, doing the internal calculus, because you have many factors: the maturity of the industry, the on-ramps, custody, products around the financialization of Bitcoin.
Hey everyone, I'm Marty Bent. Today we're diving into a fascinating conversation with Pascal Hügli, a respected figure in Swiss banking and Bitcoin. Pascal works at a Swiss bank that's been ahead of the curve in Bitcoin adoption, helping clients understand and invest in digital assets. He's also an author and regular speaker on Bitcoin's role in traditional finance. In this episode, we explore some really important developments in the Bitcoin world. We'll look at why the traditional 4-year Bitcoin cycle might be changing, what's driving Bitcoin adoption in traditional banking, and where Bitcoin's price might be heading. Pascal brings a unique European perspective to these topics, especially interesting given Switzerland's role as a global financial hub. If you enjoy this kind of content, you can find the full episode of the TFTC podcast in the description below. Hit the like button and subscribe to the channel to stay updated on more conversations like this one. You know what's fascinating about Bitcoin? For years, we've watched this pattern play out like clockwork. Every 4 years, there's this massive surge in price, followed by a big drop. It's tied to something we call the halving, where the new supply of Bitcoin gets cut in half. But right now, in 2024, something feels very different about the market. Let me explain what I mean in this next clip.
With all the factors we've been discussing throughout this conversation, there is a reality which I can see materializing where we do not have the typical 4-year cycles that we've had historically up to this point. We've talked about this, whether you call it hyper Bitcoinization or the tipping point. And that's one thing I'm grappling with, doing the internal calculus, because you have many factors: the maturity of the industry, the on-ramps, custody, products around the financialization of Bitcoin. Then you have the fact that it's been around 16 years. Is Bitcoin a big enough brand name? Does it have enough brand recognition? Is it Lindy enough where people are like, oh yeah, you hear about marketing all the time. It takes X amount of touch points for somebody to actually convert into a user of a product. Has Bitcoin been around enough that enough people have received enough touch points with Bitcoin that they will convert to users? Obviously, what I'm doing here with this podcast, you have a show, you're educating your clients and the people you work with at the bank. Has the information been distilled to a point where it's very easy for people to grok Bitcoin relatively quickly? And then has that distilled information been distributed among enough people? And are we approaching that social tipping point where the brand awareness and the understanding of Bitcoin is such where people feel more confident holding it?
What I'm diving into here is the idea that Bitcoin might be entering a new phase of maturity, and it's important to understand why this matters. Think about when smartphones first came out. At first, only tech enthusiasts had them, but eventually they became something everyone understood and used. Bitcoin might be at that tipping point right now. When you're trying to understand any new technology, especially something as complex as Bitcoin, it usually takes multiple exposures before you feel comfortable enough to actually use it. Marketing experts call these touch points, and they say it often takes 7 to 8 encounters with something new before someone takes action. What's really exciting is that we're seeing all these pieces come together at once. First, you've got better ways to buy and store Bitcoin. It's not just some scary technical process anymore. Regular banks are getting involved, investment firms are creating Bitcoin funds, and even governments are starting to take it seriously. Then you've got all these new financial products being built around Bitcoin, things like loans and investment vehicles that make it more useful for everyday people, and big institutions through podcasts, news coverage, and just regular conversations. More people have heard about Bitcoin now than ever before. The information about Bitcoin has also gotten clearer and simpler. We're not talking about complex cryptography anymore. We're talking about saving money in something that can't be devalued. This combination of better infrastructure, clearer education, and multiple exposures might mean we're approaching what we call a social tipping point. That's when something goes from being new and scary to being normal and accepted. Up next, let's hear what Pascal noticed when talking to his friends about this very phenomenon. One of the most reliable ways to understand how Bitcoin is changing is to look at how regular people talk about it. Not the experts or the technical folks, but everyday people who are just trying to figure out what to do with their money. Pascal shares some really interesting observations about this transformation.
I have a feeling myself that we could be at this tipping point because something that comes to mind is when I talk to my friends, and I've already talked to them about Bitcoin in 2017 and 2018, and then again in 2021, but they were still kind of not understanding what Bitcoin really is. They really saw it as some sort of speculative vehicle, that it was going up and going down, and they maybe held it themselves and then kind of sold it again. But nowadays, at least, okay, it's anecdotally and it's really my friends, and obviously they have been following me, and that's why it's been dawning on them, But they kind of are. Yeah, now I get it. It's this supply which is ultimately scarce, And one thing that I feel has also done a tremendous job of educating people, and I feel like it has only been around this cycle, is this story of storing your time and energy in something which is absolutely scarce. I feel like in 2021 or 2020 or even before, we haven't talked about it in these simple terms. It's probably props to you guys, Jack Mahlers, other people, Breedlove, who have really fostered this idea of, hey, you go out to work, you earn your money, and you have been storing it in something which can be diluted, and even if it's not fiat itself, real estate, everything else has sort of a tendency to be like that. More units are being created, and with Bitcoin this just doesn't work, and this is such an easy story. I think people now get this, because they have heard this already, and then combining it with this, okay, I see, I really get this. I want to store something like this for the long term, my energy. Then always, if Bitcoin kind of comes down, and I've seen it in the last 6 months where it was kind of choppy, where a lot of people approached me and they were like, okay, if it's now going down to 50, I will buy for sure.
What Pascal is describing here represents a fundamental shift in how people think about Bitcoin, and it's worth breaking down why this is so significant. Back in the early days, around 2017 and 2018, most people viewed Bitcoin purely as a way to make quick money. It was like a digital lottery ticket: buy low, sell high, hopefully get rich. But that kind of thinking leads to exactly what we saw: people buying when the price was high because of excitement, then selling in a panic when it dropped. But now something really interesting is happening. People are starting to understand Bitcoin's core value proposition. It's like a battery for storing your hard work. Think about it this way: when you go to work, you're trading your time and energy for money. That's literally your life force being converted into currency. The problem is regular money loses value over time because governments can create more of it whenever they want. Bitcoin, with its fixed supply of 21 million coins that can never be changed, offers a way to preserve that value. When people start to understand this concept, that Bitcoin isn't just about getting rich quick, but about preserving their hard work, their whole approach changes. Instead of trying to time the market, they start thinking long term. They look at price drops as opportunities to buy more, not reasons to panic sell. This shift in understanding from speculative asset to wealth preservation tool is crucial because it changes how people interact with Bitcoin. They're more likely to hold on to it through price swings. They're more interested in learning how to secure it properly, and they're more likely to tell others about it from this perspective. Speaking of where this could all lead, let's hear about some potential price targets and what they might mean. The big question on everyone's mind is always, where is Bitcoin's price going? It's natural to wonder about this, especially when we see such dramatic changes in how people understand and use Bitcoin. Here's an interesting perspective on where this could all lead.
Generally, for me, I don't know. It could be going anywhere, because as I said, the chips are off the table now with Trump having moved in, and I feel like the next target will probably be gold itself, which would be around, I don't know, 500, $600, $600,000 per Bitcoin, and then yeah, in the end, it's probably the treasury market that we're eyeing, and then we will have a lot more upside as well. So I think not sure about this cycle, but I'll take it as it comes, so to say.
Yeah. No, and like you said, we'll only ever know in hindsight. And that's the other factor that plays into my super cycle analysis. If we're backing into it, I'm not saying it's happening. The $1.8 million prediction was tongue in cheek. Would not be surprised, but tongue in cheek. Probably not going to happen. But like you said, we'll only know in hindsight. And backing into the super cycle theory, how it would materialize, like you have market participants who have been in Bitcoin for a while get conditioned to expect these 4-year cycles, and then the suddenly moment happens and the 4-year cycles just aren't there anymore. And so you're sort of taught over time, it's my third or fourth cycle now, to expect these 4-year waves of an influx of users and the price running up and a crash and rinse, repeat. But someday if Bitcoin does what we think it can do, that's simply not going to happen anymore.
Covered a lot of ground today, from the changing dynamics of Bitcoin's market cycles to how everyday people are starting to understand Bitcoin in a whole new way. What do you think? Are we really approaching a tipping point where Bitcoin breaks free from its 4-year cycle? Leave your thoughts in the comments below. For more insights like these, check out the full episode of the TFTC podcast, link in the description. If you found value in this discussion, hit the like button and subscribe to stay updated on future content. Thanks for watching.